So I have talked a little bit about different programs that we have, and I kind of wanted to talk about a bridge blanket loan program that we have. It's a super great program, and it allows you to do the things you need to do when you're trying to sell a home and buy a home at the same time. So basically, when you either have your house listed for sale or you don't have it listed for sale, maybe you haven't decided if you want to do that, but you find another house that you want to purchase, and then you do decide, well, maybe I might sell my house, but I'm not quite ready yet. Maybe you want to wait till the market gets a little better, or maybe you don't. Maybe you just want to keep the two, but you don't want to have two separate loans. You want to have one loan. We can combine the two properties, and that would be considered a blanket or a bridge loan, bridging the gap between selling one house and buying the other. So what that entails is we would take the value of the house you're purchasing, so that's your purchase price or the appraised value, and then we would do an appraisal on the home you're looking to either sell or use the equity from. Then we would add those two together, and we would give you, I believe, about 80%. Sometimes we can go higher, but let's, for all just, intents purposes, we would take 80% of that. Now, and do an 80% loan to value. Now, if you have a loan on the house you're looking to possibly sell or maybe just incorporate, we would take that 80%, we would subtract the loan because we will pay that loan off. So again, you will have one loan for the both properties, and then we would give you the difference, and you can include closing costs, you can include some payments. Sometimes you can even get cash back if you have enough equity built into the house you're looking to sell. So what this enables you to do is either combine one property, two properties, three. Maybe you have 5 properties and you don't want 5 separate loans. Maybe you just want one loan. We can put all those properties together, pay off all the mortgages on them, and put one together. Now, the other end of the pole, say you do want to sell that one house. So if you do the loan together, and then we take the equity from the home and pay that, buy the new house, pay closing costs, any of that, then maybe you sell that house within 3 to 6 months. What you can do is take a big chunk of the money you get from the proceeds. You can either take all of it or some of it, or even sometimes none of it. But you can take some of that money and put it down on the one loan and do what we call a recasting. It's not a refinance. I think it costs maybe $250, not sure, but it's a recasting. And what they do is you keep the same rate. They just now take the lower amount that you owe and they redo how many months you have left on that loan. And then that would be your new payment. So you don't have to keep the big high payment that you had if you sold that property. So it does help you get a lot of different things done, whether it's not have a whole bunch of mortgages, or whether it's buy that property right now that you love, but not worry about selling the other property until you're ready. So if you have any interest in something like that, there's a lot of good uses for it. Give me a call. Dawn Hall, Van Dyke Mortgage, 239-789-7561. Your lender for life.